About what? Well, just revisiting the global markets, the SGX Nifty is indicating that we'll have a 200-point gap up. Some of the emerging markets yesterday had big rally. In fact, a couple of markets were up 6% as well in the Latin American markets. But even if you look at the markets closer home, there's been a decent rally, and we have been part of that. On Monday, of course, we had some profit taking. Ashwani Gujral, Sudarshan, Sukhani, and Mitessh Thakkar now join us to make sense of the market technicals. Good morning. Ashwani, if we have a 200-point gap up, how do you approach the index from there then?
Well, good morning, and basically after a 200-point gap up, you wait for the market to cool off. Maybe it cools off 50-70 points towards 9100 9120, and from there you try to buy it. If it does not cool off, which looks a bit unlikely given the uncertainty of Asian markets, then I don't think you want to chase this market. Overall, if you see the way global markets etc. are panning out, the fear is slowly coming off, and that could be seen even in the Indian markets. So while you can call it a trading rally or a bounce or this or that, the higher we move, the further away we move from 7500. I think the odds of retesting the lows are dropping. So, confidence is more likely to come in as we move higher.
Okay, fair point. Well, Ashwani, your support lines are running as you speak. So let me go to Sudarshan. Sudarshan, how are you approaching the market?
Good morning, Lata. Well, we missed the markets yesterday, didn't we? Had we been open, we would have got some of the gap up during intraday trading. But today, after the 200-point gap up, we know that the trend is up and we want to buy this market, but we cannot buy after 200 points plus. So that's the only way to enter this market or re-enter this market is to wait patiently for either of the two things to happen. The market dips, whatever it dips, I can't quantify it, but it must dip reasonably well. Or it goes into a huddle consolidation. That consolidation breakout is also a buy. But there's something else. We do not know if this market is a bear market rally or the real thing or whatever. What we know is that deep corrections are likely to come again. They have not gone away. So please follow your stop losses. That was my point. Your stop loss for the long trade is 9,050. Buy on a dip or buy on a consolidation breakout.
All right, fair point. Mitessh is also with us. Mitessh, if this market does see a gap up opening as the SGX is suggesting, what should be the next thing to do? And what are the markers on the Nifty that you're watching now?
Yeah, good morning. So my sense is that, with this gap up, we will clear the 9100, 9120 zone maybe. And then if that happens, we might head towards 9300, which is what I've been maintaining for many days now. Around those levels, I would be inclined to take profits in all long positions on stock side as well. And in case we see a weakness around 9300, we would again get into the short side of the trade. My belief is that with the volatility indicator settling down, we might do a range of about 9300, which being the upper end of the range, to about 8250, 8300 for the next 2 to 3 weeks.
Okay, fair enough. Let's do one thing then. Let's talk about the stocks. Ashwani, what are you trading? Buy and sells?
See, Larsen is a buy with a stop of 850, target of 900, and possibly this is now trying to price in some sort of resumption at some point, because otherwise there is no reason for Larsen to go up. This is a buy with a stop of 850, target of 900. Hindalco is a buy with a stop of 109, target of 120. Bharti Airtel remains a buy with a stop of 500, target of 540. Adani Port is a buy with a stop of 250, target of 275. And IndusInd is a buy with a stop of 400, target of 435. Just one little insight, that everything that is stopped, it is in the price. the market will now look at resumption of, industry and services, etc., which could be expected in 15 days. So trying to be very bearish because of yesterday's lockdown may not pay a whole lot.
Got that point, Ashwini, because that worried me a lot. So that's helpful. Sudarshan, what stocks?
Well, see, Leda, large caps are going to gap up. So I don't want to go and run after them. There's no sense. We don't know what will happen and how much volatility will exist. So I'm looking at mid caps to buy. And some of the good quality mid caps are now available at much lower prices. Everything is. So Pidilite is a buy. Same story that the Nifty is doing. Pidilite is building a small base after that big bear market decline. That base is suggesting an imminent breakout. I would go and buy Pidilite. Then UPL, after many weeks and months, has come in my buy list. After, again, it went through a bear market, having a sort of a stop there at lower levels, consolidating, and an imminent breakout on the upside. The third is NMDC. I wouldn't go too far with NMDC, but it's a short-term buy because I'm not very upbeat on metals generally. But then it's giving us bullish patterns, so go and buy it. There's also a short sell. This market could stall during the day, could. And then TVS Motors is a short sell. It's not participated in anything so far.
All right, got that. So just balancing it out there. Mitessh, what about you? What are the stocks on your list this morning?
Yeah, I have 3 buys and a sell. On the buy side, I have a buy on Coal India with a stop at 142.5 for targets of around 152. Also a buy on Motherson Sumi with a stop at 60 for targets of 70. Bandhan Bank is the final buy call, where I would recommend buying with a stop at 187 for targets of 206. And the solitary sell is on Bajaj Finserv. So if it starts trading below Monday's low of 44.70, go short with a stop at 45.45 for targets of 4,200.
Okay. Gentlemen, thanks a lot. We are going to come back with another round of questions. But before that, we thought we'd put some more opinion as well. And this one is coming from a veteran financial sector expert, chairman of HDFC, Deepak Parekh, spoke at a webinar yesterday, and he said that he thinks the real estate prices need to fall significantly after the COVID pandemic. He was speaking at an event organized by the National Real Estate Development Council, NAREDCO. Parekh also advised developer community to compromise and do whatever it takes, to compromise on prices, not quality, and do whatever it takes to sell projects.
One-time restructuring, a recommendation that has been made several times to the regulator now. This, to my mind, is a better option, a better solution, rather than to renegotiate, a better solution to renegotiate timelines of repayment, rather than getting into legal tangles of force majeure, which are triggered rampantly. Unwinding from this legal mess will be very painful. And finally, for some period of time, for a prescribed, predefined period of time, shift to 180-day NPAs from 90 days. We have to incentivize migrants to return to work in phases. I feel that the government, in consultation and in association, in partnership with the developer community, must ensure easier travel and enhanced insurance cost of the migrant labor back to construction site. For instance, you can offer only for first 45 days if the migrant labor comes back from their village. The government and the developer community will help them partly pay for their travel cost and insurance costs.
Okay, well, that's some of the advice that came from Mr. Parekh in terms of how to help the financial sector, which is going to get to the rough end of any sector doing badly. We'll take a break. On that note, we are going to come back with the pre-opening rates, and we will have a very interesting survey done by Bank of America on fund managers and how they are looking at stocks, sectors and markets going forward.
Brought to you by